Alright, I'm done for the day. Just needed a little bit to pass the challenge, which my target was a little bit above 53,000. And yeah, done. Was on a little bit of drawdown, but that was just enough to take me over the hump. Yeah, it just take me over the hump, which we completed it, and then the challenge is good, it's done. Pretty much. I will just I'm just gonna sit down here and we're just gonna monitor the trade until the end because I already started the stream, so might as well just watch the trade. So in this specific trade, I will consider this as our buy stops. If I were to like hold this trade longer, that would be the stop that I would wanted to see. But this trade came off of a 4 hour idea that I already marked up here. It came off of an hour trade idea. I think I should have it somewhere here. So if we look here on the 4 hour time frame, on the 4 hour time frame we do have a fair value gap that I traded into. Then we have this shift in market rate on sell side liquidity right here. We got the shift in market structure, trade back into the fair value gap. 4 hour fair value gap, the aim was our buy stop, the nearest buy side, and those are the targeted level, the levels that I will be targeting. And that's the targeted level on the 4 hour. I did not take my entry on the 4 hour. As you can see, in 1 hour we don't have a fair value gap, but we did trade back into that 4 hour fair value gap. Then on 15 we don't really see anything at all. However, on 5 minutes we have a shift in structure right here, and then a return right back into our fair value gap. So the target is up there. And basically that's the trade. So I'm just gonna sit up here, and then we're just gonna wait for the trade completion. And as for me, the account is due for lock. 53,000 passed the account, which I'm really excited about. And I didn't really need that much today. I started the day with a initial loss, and then I just needed a couple of trades to like get it all back. So I look for a high probability trade setup, and when they present themselves, I'll execute. And based on how much they turn out, I'm done. I don't need to sit up here for a long time. Even if I waited for that 1,000, would have gotten it here, which still would be conditioned for pass on the challenge. But well, I didn't want to wait that long. So let's see how the trade turn out. And yeah. So we have been in this trade for about 15 minutes already. As we enter here, like around 10, it's 10:15. It did move up, which there's a chance for there's a chance for price to come back down into this gap once again before continuing higher, because even though the entry that I had was from was after a shift, but sometimes it can come and just take out this structural shift here, and then come right back down into this fair value gap once again, and then start trading higher again. Or you can just come back down, close the fair value gap, invalidating the trade that it doesn't want to go higher anymore, due to like higher PDRAs that can cause price to to not continue higher. So one of the things that I notice sometimes when I trade, or one of the mistakes that I make is a factor of ignoring higher time frame PDRAs. For example, I will be trading, but then there's a 15-minute fair value gap. I'll be in a profitable trade from here to here. Like today, if I didn't need to like close the account, I'll probably be waiting on this trade, right? Or the fact that it got here, I made my money, it's still good. But what I wanted to convey here is like sometimes we'll be waiting for those target for price to get here, which will be making a lot of money if we get there. But at the same time, by focusing too much on this level, we tend to forget PD arrays that can momentarily make price get into a pullback or retrace a little bit before it gets going again. So I was in a trade a couple of days ago. It was something like similar to this, but the entry was on a 1 minute 30-second fair value gap. Price started moving well in my direction, but I did not check to see what are the resistance level on higher time frames such as 15-minute, 5-minute, etc. And so when price got into a 15-minute fair value gap, a bearish fair value gap, it quickly repriced lower, erasing all of my profit. So I did not take a profit. I was profitable, but that means the trade was profitable, but I did not take a profit, and it closed me at break even. I ended up losing on that day because of just the psychological, torment of like going through, oh, I'm profitable, I'm making money, to within the next second or minute, I'm not making money anymore. So there are cases where it will move from a fair value gap while it didn't really shift in market structure yet. As you can see here, it just wicked through this high and then come back into the fair value gap. The reason why I believe that here it might just continue higher is because of the 4-hour time frame setup. Because on the 4-hour, we're looking at a nice setup, trade back into a fair value gap. I'm expecting price to just continue higher and then not come down anymore. So that's kind of like how I'm looking at it. But it is also possible for it to come back down into this fair value gap and then accelerate higher into the buy side. And like even if we just come up here, you can see that we do have a bearish breaker here. The price just tapped and then quickly retraces. There's a chance. There are two scenarios here. It may come back down into the fair value gap just to properly reprice the market, shift the market structure. We'll get it here. Really, we have a clear shift in market structure, right? And from here, we can now drop back into the fair value gap once again. and then from the fair value gap we can attack the buy side. In case it dropped and closed below the mean or the consequential correlation of the fair value gap, then we invalidate the trade. So if, let me just put a note here real quick. If price closes below the low So if price drop from here into this fair value gap, which as you can see the reaction is quite strong, I'm pretty sure if you go on a 1 minute time frame, we will have a fair value gap that's moving price higher, which looking at it, the reaction to come back here is less likely. Plus if you couple that with the 4-hour fair value gap, you know, you got yourself a nice setup here. The mistake or something that usually happens when we're in a trade like this is, how do you differentiate between the fear of missing out this trade and the patience of taking the probability trade? I would say, because there has been time where I will be in a trade like this and it will be moving and it start retracing based off on a higher time frame PGR raise, and then I would take an entry from the first 1 minute fair value gap or 2 minute fair value gap, whatnot, and it doesn't stop rise and it just kept dropping. So it made me think when I was rethinking my when I was doing my journaling, reanalyzing my trade, my entry, my execution, because that's one of the big things. Like, yeah, you can understand where price is going, you do have a better understanding of market narrative or price action, but still there's something about execution that you always get it wrong, right? You may be right on the direction, but your execution sucks. You may overtrade before the right trade happened. You may trade at the wrong time and all this kind of stuff. So like in this case, what I usually do like today is I want to see a clear return into the fair value gap like we see here to take the trade. So now that I take the trade and then I'm looking at it, it's possible for it to drop back here. If I just wake up, right, and I look at the chart, and that's something I want to do in the future, and then I see the reaction back from here into this fair value gap, I am not going to take that trade. I will rather wait for it to come back down into this fair value gap and see if it doesn't close below the fair value gap and then take it once again. The reason here is that I will support taking a re-entry or adding to put your position with a lower size at this level is because of the narrative of the market. We do have a 4-hour fair value gap here that is pushing price really higher. We do have the shift in market structure on a 5 minute that dropped back into a 5 minute fair value gap, accelerated. Now if we look on a lower time frame, we do have a 2 minute fair value gap that price is dropping into and is rejecting higher, but we can see the resistance between the two. I mean, you can take a second, you can add an extra position here, but like I said, when do you differentiate between FOMO and taking the right trade, right? If you have enough position or you have enough risk leverage to add a small position here and then just add a little bit to your risk, that's fine. But if you find your entry here, might as well just wait the trade. Just wait it out. Wait it, leave your stop loss where it is. it may come back right back into this fair value gap, which you would definitely be at break even. And if it does come back into this fair value gap, you just wait to see, does it close below the low of the fair value gap? If it does, then the trade is invalidated. You will get out of the trade with a small loss. No break even, but small loss, because the fair value gap is still at right at our entry. If it does come back here, does not close below here, and then continue moving higher, good. The trade is still holding out. You are not adding any extra risk to your trade. You are not trading based on FOMO. Let's say you just wake up and then you are looking at the setup, you see the shifting market structure, and you are seeing this fair value gap not really pushing price higher. It tried, but we can see the resistance between this 5-minute fair value gap. And now we wait to see a return back into the fair value gap. Does the 5-minute candle close above or around this level? If it does, then on the next candle, I will be bullish. I will be entering, having my stop loss, definitely probably a tight stop loss, right somewhere below the fair value gap, so that, once we move from the fair value gap, I'm expecting an expansion higher. But that's, like I said, it's just an understanding of how price is moving and what your internal is telling you, because we will be entering here because we see this fair value gap, trading into, and based off FOMO, because we are like, oh, we are missing the trade. Oh, it's already traded in the fair value gap. I used to do that a lot, where I would just come out, see, oh man, I've already missed the fair value gap, and it's right here, and I'll put a big position because I already missed this large position. How can I just capitalize on everything up here? So, like I said, how does this candle closes will tell us more about the trade. Does it close around the consequent encroachment, right? So that it gives us more confidence, because if it does, probably the next candle will be much stronger to continue higher, and it will give us more confidence to attack this buy side, rather than, because we have a clear shifting market structure here, we have a clear return into a fair value gap. We want it to be closed into the fair value gap, and on the next candle we want to see an acceleration. However, if it does, let's say I still hold the trade and it come back right here, I'm not going to close it. I'm going to close it once this candle closes right here, and I will tell you why. There may be a chance for the market to not continue higher. I keep my bias bullish until we invalidate this fair value gap altogether. So let's see how it turns out. We got about a 1 minute on that specific 5-minute. Depending on how this 5-minute closes, it will tell me how the trade, what will be the result for the trade. About 20 seconds in the fair value gap. If it closes in it, I will take a trade on the practice account. Okay, 3 seconds. Okay. But this is a practice account. That's 1%. And then we'll see. Trade gets invalidated if we still close below that fair value gap. But if not, we hold it. So here where you would be an alternative for me, or a, a hint for me to get out of this trade. So if you look here on this is a MNQ, and as you can see here, we have something, right? We open 9:30 here, we trade above PM session high. It quickly dropped back into this fair value gap, right? If I were bearish, I will be shorting the market here. I'll be looking at this fair value gap, and I will be shorting the market because of that. But because of the 4 hour time frame, I'm looking at this. If we close outside of this fair value gap, that trade that I just showed you on the 5 minutes is really valid. But if we don't, there's a high chance that market will flip around and then come for the sell side and validating the 4 hour fair value gap. So it's this kind of market where it can literally go either way. Based on those, or based on this reaction, I don't really like it. So what we're gonna do to protect our position, because we got our entry right here, is we go back on NQ and just reduce risk. If it's 5 minutes still valid, we are gonna continue higher. But if not, if it doesn't, so in order for me to be fully confident in my bullish idea, I need to see it close above this fair value gap, because it is a significant fair value gap. Uh, right now we get a couple of confirmation for bullish. One, we have a 4 hour fair value, we have a 4 hour shifting market structure fair value gap that we're moving base off. Two, we have a 5 minute fair value gap after shifting market structures that we're moving on. Now the next confirmation that I need is for it to displace above this 2 minute fair value gap. Why? Because this 2 minute fair value gap is above a PM session high after a shift on market structure on 2 minutes back into a fair value gap. I like how it's getting close to the high of the fair value gap. I need to see it close outside of it. Based on all of these three confirmation, if that does happen, then I will be holding the trade all the way through. But as well, it's about risk management. I entered the trade, the risk was about 1%. Now we dropped the risk to 0.5% because there's no need for this to come back down into this fair value gap anymore, unless it is bearish and is shifting to move lower and attack the sell side right down here, which I am not bearish. So those are just a parameter, like things that I usually try to like go through when I'm in trade or when I'm doing my analysis. And sometimes you get frustrated because you will go back and forth between you go back and forth between between biases, which is not good at all. So based off that, I'm gonna invalidate the trade because on this 5 minute fair value gap, that re-entry, I want to see a strong retracement higher, and I'm not seeing it. And when I'm not seeing it up here, might as well not hold the trade. Yeah. Because if it closed up here, the 5 minute were to close up here, and I would have been fine with it, but I just don't like the fact that he's respecting this fair value gap after a shift in the structure right here. So as you can see, trade, bullish trade, invalidated, and then now the bearish are stepping in now. And this will be our target. I guess that's what it is. That's what it means to day trade. You get to like go through market, you know, how market moves, and then as you can see here, I would say the target will be down here. And then you are getting this back and forth between 5 minute fair value gap and 2 minute reaction. And these are the days that is very easy to go on tilt because you're going through emotions, right? Through a wave of emotion. Starting here, you are profitable, bullish. You take out the nearest buy side right here, right? You are bullish, trade back into the fair value gap, you enter again, you are bullish, you are making money. But then once you trade back here, if you did not notice it, bang, it flips around you. It flip on you, right? Now you're losing confidence, and then you are questioning yourself, should I really go bearish now, right? Especially if you were to lose money, and then if you seem to lose money and then you're losing control of your emotion, you start increasing your leverage, increasing your re-entry, then bang, you're already tilting. By the next thing you know, you already hit your daily loss limit, right? For those that trade challenges, So just being mindful of those things. So now, if it does not get below the low of this fair value gap by 8, then I'll just consider the whole day to be a consolidation and then not be in it anymore, because there's no point when I don't have a natural bias, right? My initial bias was bullish from a 4-hour time frame, from a 5-minute time frame, where we trade back into this 5-minute fair value gap. But I also understand the influences of price when it comes to uh the session closing, the session highs, the session lows, and then also like how it reacted around the 2 minute fair value gap after it seems to be shifted on a lower time frame. Let me take this thing first because it's confusing if I keep flip flopping and give you guys bias like this. By the way, this is not trade signal. This is just for entertainment purposes only. I am just reading market tape reading, so there's no need to take anything from here. So I was talking about earlier about how not when we don't when we neglected PDRAs, right? It will affect how we trade on most time. I told you guys about the retracement from here back into this fair value gap. That's another PDRA that price is finding. So if like I put the sell the short idea over there, if you were just to wake up and then you see this and then you look at the PM session high, PM session low, you see the fair value gap, and then you let FOMO get to you, you over leverage on this, and now you're in a trade that is close back to break even, and you are like, no way it's gonna get there, but at the same time you are putting a big position on the trade. So your emotion is going between if it get here I'll make a lot of money to if it will get back here I'm losing a lot of money right now without checking this. Now if you trade it the other way and then you trade it here, price get here, and you didn't then know this, you'll be like, okay, what is going on? Why is price going back and forth? You may close position, you may start hiding, you just start flip flopping. So it seems like the higher time frame has a lot of I would say power on dictating where price is going, and as you can see here, bulls are still holding. We're still not below this fair value gap yet, so the trade is still valid, and now we're closing outside of that bearish fair value gap. Right, so if I'm going to ammo position here from this to this, now this is a really good trade. Now you just wait. If it gets here, take you out, fine, because now you have all of your confirmation in place. You have your shifting market structure, you have a drop back into a fair value gap. From here on, you want to see price expand higher. So here we just hold and see. If it take us out, then we're just in a problem consolidation, so it's just a bunch of back and forth. If it the second thing is it will just accelerate and get into those. One thing that can really help with that decision is here immediate rebalance between those two candles. So we're going to see a high displacement from here into this. But then again, as you guys can see, it's all about management. I was in the trade, I entered here, there was a pullback. By the time the pullback was starting, I already locked in some profit. Now I monitor and see the reaction in here. I see if it breaks above the fair value gap or not, which it did. Now it gives me the confidence to get back into trade again, aiming for those buy side or the buy stop right here. So it's all about managing your risk, defining your risk parameter before you get into a trade, and then sticking to a better understanding of market, looking at market in all dimension from all different time frames to understand why price is doing what it's doing, because based on my explanation we do understand why it retraces here, we do understand why it's retracing here. Now we wait to see, can it trade above this? So let's see, let's find out. So this are one of the hardest day, like especially if you don't take profit or you don't close your trades. It would be really annoying because of the back and forth. And those are trades that take a while. You know, yesterday I took a trade and literally take like around 10 minutes to get to the point. Today I've been sitting here for close to an hour already, over a little over an hour and 30 minutes, and we're still struggling. The thing for me, if it is able to close above this level, then we are gonna see some nice expansion higher. But if it fail, then you know, will it just be bouncing around here? At this point, there's no other speculation that I can tell you because at this point I'm full bullish. Uh, because I'm not seeing it going lower. If it goes lower, I am wrong, and the market is doing whatever it wants. That's why I do have a stop, right? If it's wrong, if it goes lower, I am wrong, and it's just a loss. You know, just take it. As long as you determine your risk parameter, so that you know that those losses are not gonna hinder how much you're trading, how you're trading tomorrow or the day after that, then you're fine. You know, I've been really learning a lot when it comes to losses recently, because I've found myself in moments where I couldn't handle loss, especially when it comes to the market, especially when it comes to having a funding account or trading on a live account. Losses does hurt, and if you don't handle them well, they will handle you. So those are something that we deal with. We'll take loss in the market. So days like this, like if the trade does not pan out, break structure, trade back into a fair value gap, you know, uh, trade through a possible bearish fair value gap that could have make you think that the market is bearish and is now struggling to trade above this previous high of 5 minute fair value gap here, and then you're already in the trade. Just hold it. Hard stop. If it takes you out, it takes you out. If it goes higher in your direction, then you're good as well, because you cannot always micromanage trade. We'll confuse ourselves. We'll start over leveraging. We'll start taking entries that we're not supposed to trade, and just a lot of mess. It's really easy to go until during those days than any other day. So that's just something to be mindful of, pretty much. All right, guys, it's 8, and we're seeing what we want to see. So I'm just gonna end the stream here. As you can see, the trade is technically definitely a loss at this point. I'm not trying to like cover my loss or anything. It's a practice account anyway. But that's my point is I just explained everything that I need to explain when it comes to this trade. And if it doesn't pan out, it doesn't pan out. It is 8, and I don't think I'm gonna wait for the trade. I mean, I'm gonna let it happen, like plays through, but then for the stream, I'm gonna be done for the day. This will be it for today. I don't know if I'm gonna stream every single day. I just felt like streaming today. Uh, I'll see. I may be back tomorrow. And who knows? Who knows when? It's not who knows. streaming will be things in the future. I just need to figure out times that really cool, mix well with my trading. And once that happen, then we definitely, yeah, it's just a matter of time. That's all about it. But yeah, that's it for today. I think I did a good job explaining my thought process when it comes to this market. And like, what was the idea behind the trade? Even though it's a loss over there, but it's a really well managed loss. And also just understanding that this market is doing whatever it wants at this point. We are literally in a consolidation between multiple things, between a 4 hour bullish PDR raise, between a 5 minute bullish PDR raise, and a 2 minute uh, PM session PDR raise, which if we look here on the MNQ, we can see this PDR raise is still pretty much valid if we drop back on 2 to 1 minute time frame. So not necessarily on 2 minutes, but on 1 minute, you can see that it's still valid. It's just there have been a lot of manipulation. Trade all the way back up here, and it's still coming back down. If it doesn't continue higher, which means that it will invalidate the 4 hour, we'll look for price to drop back into this PM session low right down here, which is after the fact. So it completely invalidate the 5 minute, which I say if we were to close below the low of the 5 minute, which is something that I said here on NQ, low of the 5 minute, the trade will be invalidated. And then on 1 minute, we trade back into this PM session fair value gap, 1 minute fair value gap, and then we're accelerating right now. So it's all about reading price action. Some days you get it right, some days it's the market flip flop, which those are the hardest day because you won't really have your bias, which is why if you have an initial bias, you can just stick to that initial bias and trade based off that initial bias. Meaning, and the thing with like trading based off your initial risk bias is, let me take this thing out first because it makes me feel like I'm tilting and I'm taking trade in and out right now. The thing with your initial bias is it helps you control your risk, because knowing that you are bullish with a set of like, okay, I will enter here on this fair value gap and I will put my stop right down here, risking a certain amount, 1%, 0.5% of my account. But if it closes below the low of this fair value gap, then I'm going to close the trade. It invalidates the trade. There's no point to be in the trade. There's no point to still trading. Knowing that you have multiple chances to get out of the trade, because the trade back here from the fair value gap first move in your favor, it comes back down, give you a better opportunity, and it start expanding, but then you notice a shift in market structure. You're like, okay, maybe it may comes, maybe it's really just changing. And then you see this, and it comes back right back into that fair value gap. What does that tell you? It just tells you that there's either a consolidation or the trade is invalidating your risk. You can literally keep a lot of your money by closing the trade right here. You will be losing a little bit below. You'll be probably losing a little bit. The trade may stay valid if you determine that's a hard stop, and then I'm just holding my trade from here, and that's a hard stop. Whatever happened, and I'm gonna wait in between all of this consolidation to see what the market does, because I really believe in my bias. Then you are free to hold it. However, you can literally just close the trade here because you don't want to go through the mental torment of back and forth between buyers that, oh, it might be going bearish or it might be going bullish, and then just literally hold the trade, because it can go back up here, take out those buy side, which at this point it's very unlikely because of the way it's respecting this fair value gap. But then this is how we understand the consolidation, or the meaning of consolidation. The fact that price is indecisive between two PGRAs, and the fact that it's respecting the lower PGRA or the lower time frame PGRA over the 5-minute PGRA is a sign that maybe this bullish trade is invalidated. So it just kind of like give you a better idea to like, okay, I understand why I'm gonna close my trade early and I'm gonna keep my money even though it's looking like it can still go back up. It's better for me to just get out here or take a small loss here than wait for the whole thing to get through. Or if I determine my risk and just for better risk management, I'm just gonna let it play so I don't micromanage my trade too much. Then I'll just let my hard stop be here, but it's a determined loss, so I know that I'm not losing a lot of my account. I know that I'm not tilting. I know that I'm not over trading. I'm not re-entering the market all the fucking time. So yeah, that's pretty much for today. If it continues lower from this point and then it breaks out below this fair value gap, it's definitely gonna come back down here to 1872. But in case this fair value gap hold and the bullish setup hold and we're just going to consolidation, then we may expect it to get all the way back up above those buy side here at 20,070. For me, I already made my money. I already passed my challenge for the day. I didn't really need that much. I just entered here. By the time I got here, I had what I needed. But if it were a normal day, and then my daily profit target would have been 1,000 or a little bit more, I'll probably close that break even or something. But anyway, that's pretty much for the day. I appreciate you guys watching. Make sure you like, subscribe. It's a journey. I'm trying to do this as consistent as possible. But then, I appreciate all of you guys watching. And before I go, we just are just extending outside of this fair value gap. So I'm going to give it 1 more minute to see if this candle close. If it does close, then it's going to get lower. But yeah, that's pretty much it. See you guys on the next one. Peace.